What's going to happen for ETH in 2025? Are we actually going to see an all-time high? All the signs point towards yes, but just like any other opening, we may have some downsides first. I want to share with you guys a couple different ideas, bullish and bearish, on what I expect ETH to do in 2025. So let's dive into this together. I want to start off with looking at a 12-month time frame. I'm treating the chart right now just kind of like a weekly close or even a monthly close. As we're coming closer towards the end of the year, that's kind of the time frame that I want to start viewing, because I want to see what that closing looks like and looking at what that opening for the next 12 months would potentially look like. And as we all know, right, if we have shaved bottoms, there's no liquidity there. So we're not really looking for shaved bottoms. We're looking for a push down to the downside and then a massive push up to the upside. When I look at the 12-month time frame, the pattern that consists is usually when we have a massive push up, then we go into like a consolidation. At least for 3 years, you can see from past data, we had consolidation. We had a big push up, we hit an all-time high, then we went into our bear market. This candle is significant, I'll show you on a daily, but then we went into a bear market, which would be 1 year. We have a second year, and we're now in that third year. So that means the fourth year, if we're just looking at past data, because essentially that is what technical analysis is, it's analyzing past data and making a conjecture based on where it could go. Fourth year for this candle should be the pop candle, if you will. It should be the candle. This should be the year going into 2025 that we hit an all-time high for ETH. And I have some targets and I'm going to share those with you. But before I go over to lower time frames, I just want to share this with you that from a sequential count, utilizing a sequential thesis, there is showing that there is a still bullish momentum going. There's still a bullish trend that's in the market right now. This bullish trend has been established since 2019, if you will. And really what we're looking for is we're looking for another candle to be higher than the preceding four. So this year's candle, we essentially need to be higher. 1, 2, 3, 4 would need to be higher than this candle. Well, that candle was an all-time high candle. So that kind of tells me we are going to go into an all-time high, because it has to create that new high going into the new year to keep that count alive, if you will. Now, from a bearish perspective, what I mean by bearish is this is going to be midterm, short term, however you want to analyze it, more midterm. I'm looking at Q1, seeing some push down to the downside, clearing some imbalance. And part of the thesis behind that is going to be based on, let's go over to a daily real quick, and we're going to flip over to USDT. And USDT is one of the catalysts that I like to utilize when I'm looking at, or at least comparing to ETH, right? We can see that USDT bottomed out, right? It's now in this V-shaped recovery. Could it have another push down to the downside and create a bearish retest for ETH? Yes, absolutely. And I have some targets for that as well too. But in the grand scheme of things, USDT is inside of a 5 motive wave count. And right now it's inside of its 4th wave. That being said, that's a correction wave, right? And so essentially that's going to be a bearish retest before it makes another move down to the downside. One thing to note is every time we've come down to this 3.7 benchmark area for USDT, ETH kind of tops right out, right at that 4K. It went a little bit higher, right up to right around 4,100. But back in March, it did the exact same thing. It went to that 3.7 benchmark, and ETH kind of topped out right at that 4,000K mark. So in thesis, if we're going to go higher, then USDT needs to go lower. So if we have that concept understood, in order for USDT to go lower, it needs to create more liquidity. So therefore it needs to go a little bit higher first. This is where that wave count comes into play. So I'm looking at some of these levels right over here. There is an order block if we're going to find ourselves to be flat for wave 4, which typically wave 4 can be flat. But if I take a look at wave 2 was right in the middle, right at these flat levels, right at 0.5. So I would be under the assumption that we're going to go a little bit deeper on wave 4 compared to wave 2, and that puts us right around like 5.08. Now, if USDT gets to those levels, clearly ETH is going to start pushing down to the downside. Now let's flip back over to ETH and use that in perspective as far as where those targets could be. I mentioned before that the bear market low was a significant area, because being optimistic, let's take off the sequential count just so it's not so cluttered. right? From a trend line in just utilizing uptrend analysis, if you will, right? We can see that this black trend line was established from our bear market lows, right? And we've bounced, 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 bounced. And so being optimistic, saying, hey, listen, we're not going to go back into, lower 2K handles or lower than 2K. We're going to kind of hold this range, which would essentially be this blue box, right? This blue box is a fair value gap that can be spotted on a weekly. If we go down to those levels and then bounce off of that trend line, there's some confluence there. It would make sense why we would bounce up to the upside. Now, before I get ahead of myself, right, we want to look at where it could potentially go if it were to go a little bit lower. And these green boxes that you see on a daily right over here, this green box right over here, well, this is an order block. And this dashed line that you see right over here, it's an imbalance, right? There's a shaved bottom that's there. There's really not established liquidity that can be pulled from that area. So while I have an order block there and I have an imbalance candle, can price action go there? Yes, because there is a magnet that sits there, and I wouldn't be shocked if it went to those levels. It would still respect essentially a wave count. It goes a little bit deeper than what we'd anticipate, but it would still respect a wave count. Now, if we're to invalidate a wave count, and the wave count that I'm referring to are these levels right over here, right? The 0.618, 0.76, and 0.88. If it were to violate those levels, I'm looking at deeper levels, which would put USDT at 0.618 levels and even potentially higher. I'll flip back to that so you guys have that for reference. Right, if we get into these levels, even up to here, then ETH has a potential to go even deeper, right? And so let's go back over to ETH and then let's look back at those levels that are to the downside. And the reason why I'm spotting those is because psychologically, like I said, if price action were to go to the blue box and bounce off that trend line, it's bounced off that area multiple times. I think everybody and their mom is probably going to try to long that area because it just makes sense. It's like, hey, this has been a strong supporting uptrend trend line. Why not long it? And for that reason, there may be a flush down. If we get a big push down to the downside, then that trend line essentially becomes liquidity. What levels could it potentially go to? Well, for one, it would completely violate this order block. And I have two different levels. I have right at the 2K handle, right, where there's just an order block there. It's been completely untested. If you look over to the left, you can see it's been completely untested. Could it go lower? Yes, it could. And this is where I think I start to lose some folks. They're like, there's no way it's going to go down to those levels. But that's why I said pay attention to USDT, because USDT, if it pops up to those higher levels, that's 618 and maybe even a little bit higher to 0.76, then this teal box that you see right over here actually is an order block that has been uncontested. Coupled with that, it also has an imbalance that sits right around 1638. There's a lower level that sits right around 1598, but there's some imbalance there. And so what I mean by imbalance, essentially, if you guys are just maybe a little bit lost, what I'm referring to is when we have shaved bottoms, right, or shaved tops, the price action goes completely uncontested. And when you have those type of scenarios or those type of candles, those candles essentially become magnets. Price action is going to come back down to those levels at some point. It doesn't always get filled right then and there, but when price action starts to go down, or if price action is going up to a shaved head, essentially it's pulling the price to those areas to create that liquidity. So essentially that's what I'm targeting on higher timeframes. Now, going back to the bullish scenario and being optimistic, I'm looking at these levels right over here. These levels need to hold, and then we would go much, much higher. I want to show you something on a weekly real quick, just because this is also playing into my analysis as to why these levels, and I'll open this up so it's a little bit more visible. I'm going to put on a sequential count for you guys one more time, and I'll show you here if we look left, just using this as an analysis for future reference, right? The last time we printed a 9 and we didn't go lower was right over here. This section right over here. I'll open that up for you. This was back in like September 2019, right? So price action was coming down, 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 down. And you see this 6 and the 7, this 6 and 7 are lower than the 8 and 9. And typically when that occurs, the trend isn't done, right? And that could be the opposite, right? If price action's going up and you have a 6 and a 7 that are higher than 8 and 9, then the trend's not over. Price action is going to continue to go up. And so what I want to utilize this for on a weekly is as a reference. It took 11 weeks for price action to come back down and correct this 9, meaning if the trend isn't over, from a downtrend perspective, it's going to have another push down to clear out that imbalance, right? From a sequential perspective. Now let's go back over to where we are in current times in 2024 and look at our last 9 that we had. Not this one over here from our bear market lows, because you can see the 9 was clearly lower than the 6 and the 7, and therefore it made sense for the trend to start reversing. The downtrend was now fully exhausted. Now we're going to start moving up. The last time that we printed a 9 like that was right over here. We did have one that was right over here, and this 9 printed lower than the 6 and the 7. Therefore, we had an uptrend. Now we have another 9 that sits right over here. But if you look real close on that, this candle right over here is a 7. And so if I'm utilizing that thesis in conjunction with some of the order blocks and the imbalance that I'm looking at from a weekly perspective, it would still relatively be bullish if we were to come back down into these levels. Even if we came all the way down to sub 2000 levels, it would still relatively be bullish. Most folks would be like, well, that's extremely bearish. Those look like bear market targets. They're not. Bear market targets are going to be sub 1K. They're going to be somewhere inside of these levels right over here. I'm not targeting that. We're still inside of a bull run, but going into the year open, Q1, January, February, maybe March. I think towards the end of February, we start to recover. Beginning of March, we'd have a little bit more recovery, but I'm looking at January, mid-January, even beginning of February, we start to see these flush downs to the downside inside of these area. One, it would completely take out this black trend line, which would be liquidity. So if you see a big flush down to the downside, that just means everyone was longing that area. That provided the liquidity for us to move down to the downside. Coupled with that, this order block right over here that has been around since when was our last push down? Since August of this year, would just kind of speak to the tune of ETH. ETH has retraced 85% of its pumps, if not even 100% of its pumps. So it's not outside of the norm for it to retrace this entire pump up, right? That's kind of what it's been notorious for. Coupled with that, we would come into untested territories. So if we come to like 2K or maybe just under sub 2K, right around like 1800, it would start to fill in this imbalance, or at least have this order block tested. It's been completely untested. And if you look at this area from this wick and just go down, so this wick right over here, which was right around 2127 inside of this area, and just look down, all this area right over here is completely untested. So going into 2025, who's to say like, oh, we're just going to pop straight up from 2400 and go all the way up to 7K? Yeah, it's possible because it is crypto, but it would make more sense to have the liquidity. If we're going to push up, we need to create that more liquidity. And if USDT is going to continue to go up to those 6.18 levels, which sit right around 5.03 and even higher, then it makes more sense for ETH come back down to some of these levels. Now, hopefully I didn't lose any of you guys on this. Essentially, my position is bullish. That's my long-term stance on ETH and crypto altogether, at least for the remainder of 2025. Getting into 2026 and towards the end of 2025, I think that's when we're going to start to flip some of those narratives. But before I do let you guys go, I'll give you guys the targets as far as what I'm looking at. I've said this a couple times before, as far as what levels it could potentially go to. Now that we've pushed back down to the downside, I think there's going to be higher pushes up. And so that puts the 5,600 up to right around like 7K handles within my targets. I'm leaning more towards the 7K for multiple reasons. One, we would have enough liquidity for us to move up, meaning there's no more liquidity that we really need to clear to the downside, except for like ridiculous targets that are not going to come to fruition. Coupled with that, 7K would put us right around a wave 3 from a larger time frame perspective. So I'm looking at a monthly perspective. So essentially we would still be inside of a wave 3 being the largest impulse wave. Usually wave 3 is going to have an all-time high, then we'll have a correction, and then wave 5 can either have truncation where it falls in a little bit shorter, or we actually have an advanced wave and move even higher than that. But nevertheless, Wave 3, from a monthly perspective, I feel like it's going to be somewhere around the 7K. I'd be shocked if we fall short of 5K handles, which ultimately still put us inside of an all-time high, but it makes more sense because of the underperformance for ETH for us to hit that 7K bracket. Now, outside of that, I'm hoping this information has served you guys well this entire year. I'm hoping you and your family have been profitable, been safe, and hopefully you guys learned a lot this year. If you are looking for further education, or at least deeper education when it comes to trading, we are hosting a ScalpX Academy that starts in February. There are some discounts for you guys if you are trading on Bitfinex, and coupled with that, even if you're not part of the academy itself, we are giving daily calls and educations every single week. I actually host a free class every single Tuesday just for you guys, where I discuss these things live, going over fib levels, support and resistance, talking about Elliott waves, harmonics, everything of that nature. Lastly, we are discussing additional setups inside of our corners. I've posted a couple about Grass, Sol, Ordi, and a couple other ones that are out there as far as where the plays are going to be coming from. Do take the opportunity to check them out. They could be profitable going into 2025, but I will leave you with this. Check out USDT. Use that as a confluence to make your determination of when you should be entering and if you should be holding on to positions. A lot of these longs, as of right now, should be treated as intraday / scalps. I think the swing long is going to be coming down from those lower levels, and I'll be giving you guys updates as those occur. But other than that, have a phenomenal rest of your year. Be safe and be profitable. I'll catch you soon.